Hey everybody, Dan Fitzpatrick here at stockmarketmentor.com. I want to just go through something really quick here, and that is Nvidia. As I'm sure you know, they report earnings after the bell in about 48 hours after the bell on Wednesday. And so there's a lot, everybody's looking at this, of course. It's like what Nvidia does and what their earnings are is more important than what the Fed does, which maybe that's true. I don't know. But all eyes are on Nvidia. So I want to look at something, and then I'm going to show you something that you may not be thinking of. First of all, with Nvidia, okay, it's been trading sideways for quite a while. This is the way the stock looks on the weekly chart, and it does look to me like this could consolidate plenty more. Like it's not, it's fine to just kind of be hanging around here in this area. Now, if we look though at this in MarketSmith, which I love, it's called Market Surge right now. This is a weekly chart, and you can see the EPS line, the earnings per share line. The hash marks are once every quarter. So this marks the quarterly earnings per share, what was reported versus the same quarter the prior year. You can see this is moving really nicely, but just this last quarter here, it kind of flattened just a little bit, not a lot, but just a little bit, which kind of it kind of reflects what's happening in the stock, where the stock's still at all-time highs, very close to it, but the slope has kind of slowed down a little bit here. So we want to be watching this as far as what happens to this line next. Will it continue to move higher here? Or will the earnings be such that, okay, well, they're still positive, but not quite as much? If this starts rolling over at all, this stock is, they say that it's pretty expensive from a PE standpoint. I think a price earnings is the biggest bunch of bull spit imaginable. It doesn't matter with respect to what a stock does. What matters more than earnings is revenue, because a company can have the best earnings in the world, meaning like basically what goes to the bottom line, earnings per share. But if they're not growing their business, if they don't have more revenue, then they're a dinosaur just waiting to die. On the other hand, revenue really is that's the lifeblood of any company. You got to be having more revenue. And so we want to be looking when Nvidia reports, we want to be looking at what their revenue is. There's going to be all kinds of stuff with respect to the tariffs, and I can't really keep track of everything that's going on with that, as far as what their latest deal is with China or with the Trump administration, or how all this stuff goes together. Revenue will cut through all of that. So you focus on the revenue and the price action. Those two things, and frankly, not necessarily in that order. So as long as this is still grinding sideways, this is a stock that I would absolutely want to and do hold. Would I buy it here? No, I can't think of a rational reason to buy this stock right now when they report earnings in a couple of days. You're just basically rolling craps. You don't know what you're going to get. So no, watch this, see what happens when they report earnings, but focus on the revenue. Now, I want to show you one indicator here. On the weekly chart, you can see the up-down volume ratio. Anything above 1 is good. It means that 1.5 on the upside versus the downside. Okay, so it's kind of the best way to say it. The higher the number, the better this is. So this is still under accumulation. And that's a good thing. We like to see that. If the stock's continuing to move up, like let's say it's really choppy, really volatile, it's still kind of generally moving up. But then we look over here and we see the up-down volume upside down. That's a clear indication of distribution. That tells us that institutions are maybe running the stock up a little bit and then dumping shares onto the market. You'll be able to see this in a stock chart. What we don't see is that in this chart. Now, compare this, though, to AMD, a competitor. Okay, the up-down volume ratio here is 1.6, so it's a bit higher than Nvidia. Again, just in case you forgot, Nvidia is 1.5, AMD is 1.6. If we look at this on the daily chart, we can see that this is actually pulled back a bit closer to the 50-day moving average. Compare this, though. I'm going back and forth here, I know. Look at the earnings per share line here. It's just flat versus, again, Nvidia working really, really well. So which stock would you want to own? Why can't you own both of them? Okay, you don't have to choose. But if I'm looking at Nvidia, I'm absolutely going to be looking at AMD. This is down at a pretty good entry point, not quite, but if this can grind around sideways for a bit, closer to the 50-day moving average, this is a stock that you could really look to buy. What I would suggest doing is watch what AMD does in response to Nvidia's earnings and their report, like what their report actually says, what they're saying about business. Because I think AMD is certainly getting into that space. Nvidia is still the big dog, no question about it. I don't know when that's going to change, but watch AMD because they've been getting pretty good accumulation on as far as the numbers go, and that's what we want. That's what we want to see. They've got, again, I'm just going back to MarketSmith, an accumulation distribution rating of B+. That's pretty good. That's really what you want to see in this. So anyway, watch AMD when Nvidia reports earnings. If it happens to pull back and gives you a better opportunity to buy here, I think you want to take it. On Nvidia, as I sit here right now, I would just say, if the stock happens to pop on earnings, I think it's going to be really, really risky to buy that stock because that's going to take it pretty close to 200, which is an obvious place to start selling the shares. So that is the long and the short of my take on Nvidia and AMD. Okay, I'll see you guys next time.